Scott Karosa, Las Vegas Real Estate and Mortgages, recently shared some thoughts regarding the tight mortgage rules that putting even the rich in pinch. Even wealthy people are getting rejected under the tough new lending rules adopted after 2008's housing market crash. Moneyed enclaves are still feeling the impact of tight mortgage money. In the breezy New Hampshire Lakes region where, on Golden Pond, was filmed and waterfront homes routinely sell in the $5 million to $10 million range, sales are brisk, but loan applications are often rejected, says sales associate Jerry Love of Peabody and Smith Realty in Holderness, New Hampshire, on the shore of Squam Lake. "We don't see deals sail through with the automatic approvals that we used to see," Love says. "And we are seeing plenty of wealthy people turn down on million-dollar loans who would easily have qualified a few years back." The rules may get even tougher under proposals now being considered in Washington designed to cap borrowing as a percentage of income. That will be especially bad news for first-time home buyers and people with moderate incomes who have the hardest time lining up financing. But even those with millions in assets and high credit scores are being turned down if their income is low. And in a low-rate environment, their investment income counts for less than ever on bank loan applications. Scott Karosa also shared that assets and high credit doesn't necessarily approved home loan. Having millions of dollars in assets and a high credit score doesn't necessarily guarantee you approval for a home loan, particularly if your income is still too low. Even the wealthy are reportedly having trouble qualifying for mortgages in this tight lending environment, the United States News reports. People with a lot of resources are usually okay getting first mortgages, but they are finding they can't refinance or get funding for a second home, says Tilla Vernon, a loan specialist for Biltmore Capital Advisors in Princeton, New Jersey. "Of course, it's a nice, high-level problem to have. But it's a real problem for retirees in places like the Northeast." But there's more according to Scott Karosa. Las Vegas Real Estate and Mortgages are set out below. Stringent income requirements are at the center of most of the problem, according to real estate agents. Assessors are protecting themselves because banks have been suing them over mortgage failures that showed inflated values, Vernon says. Assessors may struggle to find comparable sales to estimate what mansions are really worth, Love says. Still, wealthy buyers often find a way to purchase the properties, even though they may be rejected on their first try to secure a loan. The lenders want income statements. They want to check with employers directly on people's work record, and they want to see people who have been in jobs for a while, Love says. That's not something our wealthy buyers can always show.